You must have heard about the recent collapse of Silicon Valley Bank, the world's most influential venture capital and technology-focused banking institution. The economy collapsed as investors' predictions of doom spread across the financial world. While no one can say for sure what will happen next, there are knowledgeable and experienced professionals who can give us insight into what could happen. In this video, we'll explore 10 predictions by experts on the potential fallout from Silicon Valley Bank's collapse, what it may mean for venture capital financing, the banking system, and much more. But before we begin, make sure you like this video and hit the subscribe icon. Let's go straight to these predictions. 1. Impact on employment and tax revenue in the region. When a major bank collapses, the economic repercussions can be felt for years to come. With almost 20,000 employees and over 200 branches in the region, Silicon Valley Bank's closing will undoubtedly lead to thousands of lost jobs. The influx of money from Silicon Valley Bank has also been a major source of tax revenue for local governments and small businesses in the region. Without this income, communities may struggle with funding necessary resources like police departments and schools. When it comes to investments, with less money coming in, investors may not be willing to invest more into the local economy. 2. Impact on small businesses. The recent collapse of Silicon Valley Bank has left many small businesses in the area reeling. The bank has long supported small businesses, and the sudden loss of access to their resources and services could have serious implications. There will be lower availability of startup capital, which could lead to a decline in the number of new startups and reduced competition in the market. There could also be increased competition for venture capital, as more companies will try to access venture capital. Small businesses may also find it difficult to access loans and lines of credit. 3. New regulations and policies. You may be wondering what will happen to the business regulations and policies in Silicon Valley after the collapse of the Silicon Valley Bank. You'll likely see an increase in banking laws, such as tighter lending standards, new rules on how banks must operate, and more stringent regulations on consumer protection. Banks will be more vigilant regarding customer due diligence, loan underwriting, and loan origination practices. In addition to new banking laws, there could be a stronger regulatory presence in sectors that rely heavily on technology and innovation. Requirements may include compliance with GDPR and other industry-wide data privacy regulations. This could mean new policies for startups and tech giants alike regarding data security, customer privacy protection, and consumer data usage. 4. Changes to financial regulations. While it's impossible to predict the future, we can also expect to see some changes to financial regulations soon. We should expect strict enforcement of existing regulations and more stringent rules regarding lending practices and other financial operations. We are also likely to see more transparency regarding bank statements and reports, which could mean new restrictions on how banks can operate. To provide customers with better protection from fraud, banks might need to regularly update their internal systems without compromising customer privacy. It is undeniable that the collapse of Silicon Valley Bank has resulted in regulatory authorities taking stricter measures when it comes to large banking institutions, especially those operating in an international setting. So, we should expect larger banks to be held accountable for their practices, with greater scrutiny of their operations, including risk management processes, internal controls, and other measures. 5. Large regional impact and big sell-off in financial markets. We should remember that the bank only affected a small number of customers, so these predictions are important to keep in mind. While there may be some minor fluctuations in the market, there won't be any massive disruptions or recessions in the immediate future. This is good news for those who are heavily invested in the tech and banking sectors in the area. It means that their investments will remain safe and secure for at least a few more months. Also, businesses shouldn't be too worried about any instability, as long as they manage their finances appropriately and do proper due diligence before investing any money. As long as they plan accordingly and stay aware of any changes or updates from this collapse, they should find success and continue on their paths with minimal disruptions. 6. Impact on the stock market. When a bank collapses, investors get spooked and move their money elsewhere. When the stock market is flooded with money from panicked investors, prices can plunge in a sudden and dramatic fashion. But it's not just large investors who will be affected by this collapse. Even smaller investors can feel the pain. That's because when the markets go down, all types of investments, such as stocks, bonds, derivatives, and more, are affected by this change in investor sentiment. This will bring instability in the markets for some time after the Silicon Valley Bank collapses. That's why investors should always keep an eye on their portfolio and don't forget to diversify their investments to protect themselves from any potential downturns. 7. Potential mergers and acquisitions. You might not have seen it coming, but you should expect some potential mergers and acquisitions to occur after the Silicon Valley Bank's collapse. Companies that look to get ahead of the competition will use the opportunity to snap up assets that were once part of Silicon Valley Bank and build up their existing product offerings. For example, a tech startup might use the Silicon Valley Bank collapse as an opportunity to acquire a rival company or even a larger tech firm. This could lead to a wave of consolidation in the industry as companies strive to become more competitive and gain market share. 8. Increased regulatory pressure. The failure of Silicon Valley Bank has highlighted weaknesses in the current framework for regulating banks, and regulators are likely to start introducing tougher regulations to prevent similar failures in the future. This means a new set of rules for international lenders will likely be introduced. Banks would also need to increase their liquidity buffers, ensuring that they have enough liquid assets on hand to cover losses in times of stress. The strict new rules would make it harder for banks and tech companies alike to operate in the post-Silicon Valley Bank era, but they could still help make the banking system safer for everyone involved in the future. 9. Increase in venture capital activity. One of the predictions that many experts have is that venture capital activity in Silicon Valley will get a major boost following the collapse of Silicon Valley Bank. With the bank out of the picture, venture capitalists can get involved with tech startups without being tied to Silicon Valley Bank's tightly regulated loans. They'll also be able to take more risks and perhaps even find better returns in the long run. As such, venture capitalists may take advantage of their newfound freedom by investing in startups more often before they become public companies. They can also do this by taking bigger stakes in early-stage companies and helping them grow even faster. These are just some of the ways we could see new opportunities arise after Silicon Valley Bank's collapse. Number 10. New opportunities in fintech. With Silicon Valley Bank gone, it could be the perfect opportunity for new businesses to enter the fintech space. Its collapse has created a low barrier to entry for those looking to break into the fintech sector. The competition in the industry has decreased, and new companies will likely be able to capitalize on this. With fewer companies competing for investors' money, funders will have more funds available for new businesses entering the market. This means there is now a lot of money available for fintech startups and other financial service providers looking to enter this lucrative industry. Silicon Valley Bank's failure has made it clear that the industry is vulnerable to disruption. The industry will have to adapt quickly to the changing landscape, and those unprepared will suffer the consequences. And that's it for today, guys. If you enjoyed this video, make sure you subscribe to this channel and give this video a like. Thanks for watching. See you in the next video.